Back, you're watching Buy Now Sell Now on ET Now, and let's get on board our viewer queries. And first up, I'll take a query that we actually missed out yesterday, and this was from Amit Ahuja, and he wants to know about Anthony Waste. He's purchased this particular counter at about 315 at IPO time. He got allotted with the counter about 50 shares of Anthony Waste. He wants to know what should he look at going ahead for this particular counter. Ashish, do you want to share your view on Anthony Waste? How is this counter looking on fundamentally? Does it make sense to stay put on with this holding?
I haven't tracked this counter, so I'm sorry, I don't think I can comment on it.
All right, Kunal, would you be able to share your views on the technical front for Anthony Waste? Yes, definitely a fairly newly listed company.
So my apologies, Sheikh, I wouldn't be able to comment because I don't track the stock that often. And as it is, as you mentioned, that it's a recently listed name, so has a very low history as well.
Fair enough. All right. Let's go to questions that have come in on YouTube now, though. We've got quite a few people joining in, and do post your queries. If you don't have your name in your handle, do tell us what your name is as well. We've got Rohan Kumar Tripathi, who's asking about Sun Pharma at current levels. Can you enter? And I think since he's talking about current levels, Kunal, I think this question is directed to you. How does it look on the charts? Would you say that it makes for an attractive proposition now?
Not exactly. I think it's specifically if it's from a trading perspective, then I believe you can wait for some more time. I think the stock has gone through a consolidation. It's drifted below its 50-day moving average. The indicators have a bit weakened a bit for Sun Pharma, and it seems as if that the stock is not completed this corrective phase over the near term. So I think if that's the case, then possibly a level of 620, 625 could be tested for Sun Pharma. So if you're looking for a better entry point, then I would suggest closer to 620, 625. If the stock happens to correct to those levels, that could be a good entry point for you.
Next query is coming in from Shushrit Santosh, and this is on Greaves Cotton, and he's looking like at an intraday idea for this particular counter. He's saying he's holding about 1,000 shares, which he's purchased at 181 rupees per share. He wants to know whether he should continue holding or should he go ahead and sell this counter. Kunal, what's your view on Greaves Cotton? Intraday, also in medium term, how does this counter look?
So medium term wise, it looks very attractive, Shell, because I think, if I'm not wrong, I think the stock has confirmed a breakout of its multi-year highs just about today. So correct me if I'm wrong. I think the previous high was approximately at 177, 178 mark, and today the stock made a high of 182 plus. So I think in that sense, it's confirmed a breakout. So I would suggest that if you can try and convert your positions from being more short-term oriented or from an intraday specific to probably being more medium-term specific, then I believe that the return potential could be much better for a stock like Greaves Cotton. So volumes have improved in the last 3-4 months for the stock. It's nearing, as I said, it's neared a breakout of the multi-year highs as well. So these are good prospects, good signals for stocks, but typically you need to have a holding of at least 3 to 6 months, if not more, for such kind of patterns to really play out.
All right, we've got a bunch of questions coming in, and I'm going to try and take as many of them as possible. We've got Anjali Sharma who's asking about PNB Guilts, and it's trading a little weak. She's bought at levels of 55. Ashish, do you have a view on this one?
Well, I think it is a good stock to hold on to. It's really not something which plays on the bond market in a big way, and I think going forward we do expect returns from the bond market to improve. So yes, I think a reasonably good stock to have in your portfolio. It's obviously volatile because depending on the bond market movements. But yes, if the investor has time frame, has holding capacity, then I think over a period of time should generate reasonably good returns from here.
All right, the next query is from Santi on Suntech Realty, saying that she's bought around 100 shares at 274 rupees That's the average price of buying Suntech Realty. The stock is facing high resistance at around 309 to 315 rupees per share, what Santi has actually observed. The stock is really actually trading range bound. So what should Santi do? Should hold on to Suntech Realty or switch to another counter? Kunal, what's your view coming in on Suntech Realty?
I think it's a very good observation from the viewer that he's mentioned about 310 levels approximately as a level of resistance, and that's what is exactly playing out for the stock. It's also taking resistance at this 200 moving average. So typically what happens is, when the stock trades and goes below the long-term averages and tries to lift off and try and break past above it, it takes a lot of time because there is so much effort which is required for the stock to break past. You need volumes to push up high, you need market participation to improve, you need data and events also, which typically come out into stocks regularly. Even those set of news flows and events, they have to come out to be strong positive. So if you don't see a majority of these factors playing out to the stocks gain, then you typically see the stocks getting exhausted in terms of rally. So that's what exactly happening for Suntech. And I believe that for the next couple of days, or at least for the next 1 week odd, the stock may remain in a range. Since you bought at a lower level of 270 approximately, I think if I'm not wrong, then I believe you can hold on to your investments. I would suggest keep a trailing stop loss of 280 and then hold on. Let the stock eventually break out of that resistance of 310 odd.
All right, guys, just requesting you not to repost if you have already asked your question. It becomes a little harder for us to gauge which questions have been answered and which not. But I will take a question from Mahalakshmi Vasu, and this one's for you, Ashish. He's asking about MCX, and he's asking why it cannot be considered or whether it should be considered a monopoly, and therefore whether it makes a good prospect for a long-term investment.
Well, I think a very good stock idea. A disclosure here that I have also bought it lately and I'm holding it in my portfolio. Yeah, to an extent it is nearly a monopoly, yes, and it has a very good market share of the commodity exchange in India. And I think, yes, it is a very good stock to hold on to because over a period of time we expect volumes to go up higher, and commodities anyway are doing very well, and the immediate future looks very good. Nearly every prediction is talking about commodity prices heading higher, so more volumes can be expected. And yes, given the kind of dominating nature they have on this on the trading platform in India, I think it's a pretty good stock to hold on to, very safe, and has a very good potential going forward.
All right, the next viewer query is an email query from Narasimha Murthy from Pondicherry, saying that he's holding 6 shares of InfoEdge, which he's purchased at 4,950 rupees per share. What's the medium-term outlook for the counter? Ashish, how does InfoEdge look on the medium term? If you look at the buying price is 4,950. 6 shares is what Mr. Narasimha Murthy is holding. So what should he do? How does InfoEdge look over the medium term or even the longer term?
Well, I think it looks very good because it has a very strong presence in the entire e-commerce and portal space, and the kind of the various, and it's also spread across different segments and different markets from insurance and financial product selling to all the way to the food delivery business. To wedding planning, from wedding planning to real estate investments. So they cover a very huge spectrum of what we use on the net. And clearly speaking, with the increase of internet and digital platforms, I think this stock is very well poised, is doing very well. Zomato listing could be the immediate trigger going forward in the near term, but over a period of time, it's definitely very well poised to do well and continue riding on the digital boom happening in India. So yes, a very good stock. Perhaps yes, you have gotten a little higher level, but never mind. I think still it's that doesn't take away the potential of very high returns going forward.
Kunal, coming to you, this next one, Senthil Jaikumar is asking for a fresh view on Polycab, a fresh entry for the next 1 year or so. Would you suggest that can be done?
So I think it's been an exceptional chart for Polycab. I remember I think tracking the stock when it was sub 1,000 levels, and the stock is now on the verge of knocking the 2,000 mark as well. So it's been an exceptional uptrend for a stock like Polycab. And these are classical stocks which you need to buy because these are stocks which go through very steady, consistent, and sturdy phases of uptrend. So I think if you're looking to buy Polycab, then I believe you should use any dips which come along the way. So there have been periodical times when periodically these kind of stocks they go through a time correction more than a price correction, and I think those are the opportunities where you should take advantage. So current levels of 1990, you can start nibbling at current levels, but I believe as now the stock goes into a time or a price wise correction, you should take advantage of that as well.
Next query is from Shishrit Patnaik. He's saying that he has 150 shares of Cavi Seeds, which he's purchased at 515 rupees per share. He's asking what's the long-term view on Cavi Seeds. Ashish, what's your take on this counter?
The long-term perspective is still very positive. I think the business itself is going to do very well. I think the entire agri-commodity space is doing very well, and I think there's no reason to believe that will change anytime in the near future. The company has a very strong presence in their business, and I think the stock should do well going forward. There should not be any problem holding on to it.
Okay, we've got a question on Infosys for a 1-year time frame. I've lost my place, so I do not know who has asked. I'll find it. But coming to you, Kunal, would you say, okay, Magesh is asking at current levels, would you buy, and what is the target that you would have for 12 months?
So, yes, I think Infosys could be a good buy, but I specifically believe that it's better that you try and buy it on dips as well. So you can start buying at current levels, but what happens is because of the recent rally, many of the indicators have come back into an oversold territory, overbought territory. Correct me, for Infosys. So, for example, on the daily charts, the normal RSI I think for Infosys is at 81 levels. Now, for a large cap name, these are pretty overbought territories for stocks, and whenever we see the RSIs coming into the zones of 80s and 90s, we typically expect cool off happening into the price action. So it's a good chart to hold on from a longer term view, but may not be a best of the entry price, which is why I would suggest more of a buy and dips approach.
All right. The next query is coming from Abdullah on Ashok Leyland. He wants to know whether it's a long-term bet or not. Ashish, Ashok Leyland, we've seen a sharp rally from those lows for this particular counter. It is going to report its earnings, but how is it looking over the longer term? Makes sense to hold on if you have positions in Ashok Leyland?
Yeah, certainly it makes sense to hold on. I think the commercial vehicle space will continue doing well going forward. One can argue that yes, the stock has run up a lot, so ideally one should have bought it at a much lower rate. But yes, still I think the potential is there. The stock will continue doing well, and I think I don't see any reason to worry in this. The commercial vehicle space is likely to do very well once the pandemic fears get over. We expect a good economy boost and also a very good trade growth going forward. So both that should do very well for companies like Ashok Leyland. So continue to hold on to it.
All right, Neela Madhapa has got a question for us, and generally we only take one stock, but since we missed out your query on a couple of days, I'm going to make an exception and take 2 out of the 3 that you're asking. Kunal, a couple of counters for you to look at. M&M Finance bought at levels of 163 and Bharti Airtel bought at levels of 537. The question is, how long should they hold on to this?
M&M Finance could turn out to be a good stock. Frankly, Alex, I think the near-term charts for the stock seems to be back at a support territory. 150 is a key support level for M&M Finance. So I think if you're holding the stock, you can continue to hold on. This is a stock which tends to play out in a bit of a contrarian manner when it comes back to a support level. When the charts actually show signs of weakness, that's where the stock typically sees a reversal on the upside. So I would suggest a hold on M&M Finance. Bharti Airtel could be a bit tricky because frankly the stock has been taking a lot of time to consolidate. it's still trading in a band of 520, 550 on the very near-term charts. And typically, I've maintained this stance for Bharti Airtel for quite some time that it's much more better and prudent to try and buy the stock on a breakout level rather than buying the stock on a contrarian entry point or at the midway of the range where the stock is currently trading, for example. So I would suggest that for Bharti Airtel, 550, 560 is a breakout point. If the stock manages to give at least a couple of days of closing above this level, that's where I believe you can probably look to preempt and buy at those levels. Mahindra & Mahindra Finance, as I said earlier, 150 seems to be a good support. Until the time stock holds on to that support, you can maintain a hold.
All right. Our next query is from Ramesh Narsiman, and he's just bought NMDC at 176 rupees as the average buying price for NMDC. He wants to understand the short as well as long-term prospects of NMDC. Ashish, how does this counter look like? It just came out with its earnings, but over the longer term, makes sense to continue to hold on to NMDC, given that Ramesh has just bought this particular stock.
In the short to medium term, yes, it's a very good stock because, like I said earlier, commodities are likely to do very well in the coming future. So yes, and the stock is definitely underowned, has underperformed for a long period of time. So the rally in commodities worldwide would certainly help this company, and the potential for a breakout from a very long consolidation is immense. So yes, with a 6 months to 1 year kind of perspective, certainly a very good stock to hold on to and buy on declines. Longer term perspective, I don't think I would agree with it. I think once you get a return on these stocks, you should book out. The public sector undertakings generally do not generate good long-term capital appreciation, and NMDC also has a similar history. Whenever it has done well, it has been always a better idea in hindsight to have booked the profit when you were making it, and I don't think that should change. So for short to medium term, yes, a good idea, but long term, I don't think so.
Okay, we've got Neeraj who's got SBI Cards, 300 shares at 940, looking for the next 3 to 5 years. Ashish, would you say that that's a good prospect and you should hold for that period, or are there better ideas to look at for that time frame?
Well, this is an excellent idea. I think we're talking about monopoly some time back. This is a clear monopoly because this is the only listed player in the credit card business, and will also remain the only listed player because RBI does not allow any individual entity apart from a bank to issue credit cards as of now. So until that regulation really changes, there can be no other listed player in this space. So the monopoly is likely to continue, and over and above that, SBI Cards is doing very well. It is a very strong player, second only to HDFC in the card business. The growth in this business is going to be immense as e-commerce continues to thrive. So yes, it's a very good idea to hold on to, and according to me, the perfect play to ride on the digital boom which is going to happen. So yes, a very good idea. Continue to hold on to it and use any declines to add more.
All right. Our next query is from Mr. Vijay Lele. He's saying that is it good time to enter CCL with a long-term view of about 5 years? Ashish, what's your take on this counter, CCL Products?
Again, I haven't tracked this, so I would not like to comment on it.
All right. Kunal, would you want to take this one? How are the charts looking for CCL Products?
Well, they're looking quite attractive, Cheryl. I think the stock has a good history last 12-13 months. It's recovered from 150 or just thereabouts to 350, which it tested a couple of weeks back. So it looks quite attractive. It's managed to recover the entire loss, with the stock had been going through from 2017 to 2020. So it's tried to cover that as well. So the chart prospects have improved better for CCL Products, and I think if you are looking at it from a longer term view, I think it's a good buy on dips kind of an approach. I would probably look at a potential target range around that 400 to 450 range for CCL Products, given a time frame of another 12 to 18 months at least.
Okay, so I'm going to take a question from Indumati, and this is a broad question, but I request you to keep your answers short, Ashish. She's asking whether there's a long-term opportunity to be played in the manufacturing and engineering sector, and I'm sure you can speak about a lot of stocks, but what stands out to you? What's the one stock that you would bet on?
I think the one stock, if it comes to engineering space, the one stock to bet on would clearly be L&T, because I think if there is a revival in engineering and capital goods space, then L&T is sure to benefit from it. Large cap stock again has underperformed over the last several years, has been consolidating. So a revival here would be a very good news for this counter. So yes, also as a starting point, I think the first stock has to be the large cap, and this is clearly the bellwether stock in the engineering space. So it start with L&T for sure.
The next query that we have is from Sagar, and he wants a fundamental view on Abbott India. Before I go on with his query, I would really want to congratulate Sagar on this particular holding, because he's bought 1,000 shares of Abbott India at a price of 1,400 rupees per share, and he's holding this particular counter for the last 7 years. If you look at the chart of Abbott India, that particular counter right now is actually, I think, at about 16,000 rupees or levels. There you go on your screen, 16,400 rupees. So he wants to know whether Abbott will be able to beat Nestle in baby food segment in the medium to long term. Ashish, what's your take on this? Do you think Abbott will be able to beat Nestle in the baby food segment in the medium to long term?
Well, I think no, because Nestle probably would continue to remain the leader there. But nevertheless, I think Abbott India is a very good stock to hold on to. Fundamentally very good. Also, again, last about 2 years has been consolidating, has not been able to move out of a range, but looks very good for an ultimate breakout and moving higher at some stage. Again, fundamentally very strong counter, very good products. Is somewhat under-owned because not so visible, not so well traded. But for an investor, it's a very good idea to kind of buy and hold on to.
Okay, we've got a couple of short-term queries, and I'm going to come to you for a couple of them, though they are different. One is from Soumitra and one is from Vivek. We discussed, Kunal, Reliance Industries, but we didn't discuss the intraday prospects. What would you say for an intraday trade? Is that too risky ahead of the AGM? One. And the second one would be, what are the short-term prospects for India Mart Intermesh?
Reliance Industries is very difficult to comment, frankly, because I think the picture and outlook could change completely pre 2 p.m. and post 2 to 30 p.m. So I think it's going to be a bit risky to try and trade that. So if you want to play for a 50-50 bet, then you can look out for, as I said, the levels which I mentioned earlier, 2060, 2070, 2160, 170 as a support, and on the upper end 2270, 2260 as a resistance. So a break above or below those levels, you can probably look at initiating a trade. For India Mart, on the other hand, I think it's a classical stock. The stock had done phenomenally well over the last 12 months, but somehow in the last two or 3 months, from March or April somewhere, the stock has lost its way a bit. It's now corrected from 9,950 to 7,000 levels, and this has been more of a time-wise and a grinding consolidation for India Mart. So I would sense that if you are in from a longer-term view, then it makes a lot of sense to buy the stock at current levels, because A, it's available at almost 20-25% discount from its major swing highs, and B, it's also trying to nudge back to take support at the 200 moving average. So on that front, I would suggest a buy on dips approach for India Mart.
Right. And next query is from Venkatesh Varan, saying that he has 1,000 shares of Navin Fluorine that he's purchased about 150 rupees per share. He wants to know whether he should hold or sell, and what sort of target should he look at for Navin Fluorine. Kunal, what's your take on Navin Fluorine?
I think it's been a good chart. Short-term wise, Navin Fluorine till yesterday or day before was just about inching towards a breakout. Somehow the stock has gone back into a consolidation because of the lack of volumes, I would say, so maybe because of the overall nature of the market as well. So it looks attractive. would suggest a buy on dips approach to 3,250. I think is a key support for Navin Fluorine, which is also the short-term 50-day moving average for the stock. So if you get the stock back at those kind of levels, then I believe initiating a short-term trade on the upside could be a better trade for Navin Fluorine.
Gentlemen, coming to you for a quick couple of questions. Coming back, Kunal, to you. Fresh buy on Max Health, Mr. Bhatia is asking.
I would suggest a fresh buy on Max Health. I think it's at 260, 262 if I'm not wrong. So you can look at for a target of 280, 285 on Max Health over the next 1 or 2 weeks. Just ensure that this is more to do with positional trades. So you need to have the markets also doing quite well over that kind of a time frame. If that's the case, then I believe 280, 285 could be an immediate target range for Max Health, and stop loss you can keep it for the trade at 250 levels.
Very quick view on ITC. I think a lot of people are asking, would you consider this a good stock to hold in your portfolio?
Is that for me? Okay. See, ITC, I think yes, no trigger in the immediate future, but yes, it remains a very good value pick according to me. And I think if your time is not a constraint, then this is one of the safest stocks to put your money in, because it really hasn't performed well over many years now. And I think at some stage, like we have seen every good stock ultimately come into its own at some stage, difficult to predict when. This stock will certainly come out of this range and do very well. So according to me, a very safe stock for any investor to buy now in this market.
All right. This is one last query I'd like to take. This one is it's an email query from Hormil saying that please share a small cap idea for the next 2 years. Ashish, if you could keep it brief, which sort of a small cap stock do you think makes sense over a 2-year horizon to keep invested in?
Well, I think immediately I can think of is SBI Cards. I think it's a very good stock with very limited downside risk and very easy to recommend stock which you can hold for the next 2 years.
All right, then with that we'll move to the high risk and low risk ideas. And Kunal, what are your high risk and low risk ideas for our viewers today?
Well, apparently both the ideas are a bit high risk today because of the market situation. One buy and one sell is what I would recommend, Cheryl. So first one which I would recommend would be a buy on Quest Corp. That stock heading towards a flag pattern breakout at the levels of 840 approximately. So post that level is where I believe traders could look at a buy. Targets of almost 900 on Quest Corp, stop loss to be kept at 820 mark. And the second would be a sell on Deepak Nitrate. Now this has been a very strong stock, but apparently in the last 2-3 weeks it's gone into a price wise correction / consolidation, and very on the short term charts there are evidences that the stock is breaking below the 50-day moving average. So this could result into some weakness. So I'm anticipating some weakness on Deepak Nitrate. So would suggest an anticipatory sell in that sense. Targets of 1600, stop loss 1800.
All right. Coming to you, Ashish, on your high risk and low risk ideas.
Well, the high risk idea is Z. Now Z is a little high risk because of the history of not generating good returns for the investors over a period of time. But the triggers for Z are immense. I mean, I think from here it makes sense for any investor with some risk appetite to try and buy. The company has a leadership position in the the television viewership across different categories, has a very strong diversified bouquet of channels, and more importantly, the OTT platform is where they have been really investing a lot over the last 2 years, and it's perhaps the only Indian media company to be able to challenge Netflix and other global players. Z5 is seeing a lot of traction, and that is a big positive. The other thing is that the promoters hold only 4%. It is like right now in a way an institutionally managed company, and so professionally managed. Going forward, that could augur very well for the investors and the company. So I think this is a high risk idea. Media has been kind of underperforming, so I think whenever the performance in the sector comes back, Z is sure to lead the way up. So this could be a very good idea for investors with some risk appetite. For low risk appetite investors, I think Bharti Airtel clearly stands out because for whatever reason, the stock has been consolidating for a very long period of time, whereas the pricing power is slowly but surely coming back to the industry. ARPUs are going up. The company itself is doing very well. They have seen a very good traction both in the voice as well as the data segments. So according to me, the very low downside risk here and upside potential is immense. So this would be my idea for investors with lower risk appetite.
All right, with a lot of our viewers suggesting that we do this query segment on the weekend as well, I will say that if Kunal and Ashish are willing to take the time, we're more than happy to facilitate. But thank you to the both of you for taking the time today and for answering all the questions that you did answer. It's been a pleasure. We're slipping into a short break. More on the other side. Do stay tuned.